Ashwarya Capital Management has developed a groundbreaking technology based on fractal mathematics and quantitative finance and artificial intelligence to revolutionize the way we invest in the financial markets. Imagine the year was 2000 and you were a young French professional saving for retirement. Your first instinct might be to invest in your local national CAC index, CAC 40. But unfortunately, over the next 18.5 years, your investment went nowhere. It was just flat. But what if instead you chose an international market, the US market, and you invested in S&P 500? You would have doubled your investment. But what if you also had access to the global pool of all the financial professionals in the world who are timing the market, and you had access to the hedge fund index? You would have tripled your money. So clearly, both picking the right market and timing the market matter. There are current industry practices which suffer from deficiencies which we have rectified through our proprietary cause-effect trend model. The first one is they specialize in a particular market. You might go to an investment fund and they might invest just in equities or in bonds or some special area. The problem is that sector might not be trending. Our algorithm scans all markets and detects the strongest one. The second problem is that these funds almost always have a bullish bias. They always expect the market to go up. But we know that's not true. The CAC has been consolidating, and even the S&P 500 has had 5 periods when the market fell 12% all the way down to 58%. Our algorithm detects if the market is consolidating, so we don't trade. If the market is in a bullish trend, we buy, or the market is in a bearish trend, so we sell. That ensures we win almost always. The third thing is these funds have a very concentration bias. They have a few positions and they're highly concentrated. The problem with that is that during black swan events, or even during winning trades or losing trades, their portfolio has a huge volatility. We invest no more than 2% per trade, hold a trade for about 20 minutes. So we are in cash 70% of the time. And that ensures we have a very steady growth. Our Revolution technology has been in R&D for the last 5 years. And it's over 1 million lines of code were written using AI, artificial intelligence, fractal math, quant finance, and molecular dynamics. And through that, we have 3 indicators. The first one is the regime indicator. That tells us if the market is consolidating, and you can see the color is white. So the color is white, no trades. But if it's colorless, that tells us there's potentially a trend. So the geometry and slope are green. It tells us visually that the market is in a bullish phase. The market is clearly in a bullish phase. Or if they are red, then the market is in a bearish phase. So it's visually very clear what we want to do. Our third indicator, the auction imbalance indicator, tells us exactly the price point where it's the lowest risk to enter the market. And we can do that at 2% risk, make about 20% in 20 minutes, and exit. Our performance for the first 4 months of the year has been about 2,500%. Regardless of market conditions, either the market was in a bearish trend or bullish trend, narrow range days, wide range days, we have made money. This is the second highest returns in the World Championship of Trading. This was a test run that we did. And even though I'm comparing just 4 months to an entire year's performance, we are second highest in history. Our technology is scalable up to $586 billion, which is just 1% of the global financial markets. And we can do that through futures and equities. Our investors can expect about 15 to 20% returns a year, which is 3 times the hedge fund index and 6 times the market returns. Our returns absolutely crush the competition. These are 3 local hedge funds in Texas. The first one, Requero, invests in emerging corporate credit, but that has been in consolidation. The second one, Brasada Capital, suffers from a bullish bias by investing in US equities. The third one, Heyman Capital, made a big splash by shorting the subprime mortgage, and they made 200% that year. But the next big bet on sovereign debt made them just 2% a year. About us, I'm the founder. I have a PhD in computational mathematics. I was recognized by the US government as having extraordinary ability, which is the same category as the Nobel Prize. Professor Maheshwari has a computer scientist, 50 years of experience in computer science. Steve has 30 years experience as a statistician. Carl, 30 years experience in strategy. And Nick has 15 years experience in strategic corporate communication. That's my presentation. Thank you.